The one thing we want to do before moving on to our next project is reward our shareholders.
There are companies out there who've got less than you who are worth 3 times what you are.
If we wanted to compete with a whole bunch of juniors out there, I don't think that's money well invested. I think you get more mileage out of focusing on the technical issues. And if you do deliver, the market will catch up to you.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up and please leave us your comments below just to help us understand what you're thinking, what questions you'd like us to ask, and generally what we're doing right and what we're doing wrong. It also tells us a little bit about what you think about the company. And if you haven't already done so, please click the button in the corner of the screen. And for more videos like this, click the notification bell. We spoke earlier today to Philippe Cloutier, who is the CEO of Cartier Resources. They're a Quebec-based explorer and developer. They originally bought their assets back in 2012, 2014, and been sort of quietly waiting for the market to get to a position where they can develop these out. So they've picked on one, their Chimo project, and parked the other 3 for now. And they've got to a stage where they think they're 6 months out from making a decision possibly to sell. And if they do, that could be quite a big payday for shareholders, but we'll find out near the time. Take a look in the description below to see some of the other topics we discuss, anything that interests you in particular. Click on the relevant timestamp, that'll take you to that part of the video. In the meantime, let's hear what Philippe had to say. Hello, Philippe. How are you, sir?
Fine, sir.
Good, good. So you're holed up at home there, I can tell.
Yes.
You are.
In the heart of the Val-d'Or mining camp.
Beautiful, beautiful. Nice part of the world. We've not heard your story before, so I'm a bit excited because you've kind of got an unusual setup there when we were looking at it. So why don't we kick off with a 1-minute overview and I'll pick it up from there.
Sure. Cartier Resources got listed in 2007. We explore exclusively in the Quebec portion of the Abitibi Greenstone Belt, and we focus on gold projects. And what we did from early on is we bootstrapped it and did some, greenfields remote exploration. But by 2012, we took a deep dive and we decided to better our exploration approach. And there were a lot of distressed exploration companies out there with wonderful assets. And so we went on a shopping spree. And from 2012 to 2015, we bought 4 gold deposits with historical resource estimates. In 2016, Agnico Eagle took a 19.9% position in our stock, and we haven't looked back. Since then, we've been applying a very strict approach to exploration, drilling at depth, no mineralized zones, in order to, bring the next deposit online.
Fantastic. Thank you for that summary. And why I wanted to talk to you guys was you've got 4 assets, and exploration is difficult and tricky at the best of times, but I think it's even harder if you don't have a plan, because money quickly runs out. Okay, so can you talk us through, 2012, 2014, long time ago, Agnico Eagle getting involved, 2014, would you say 15 or 14? 16. That's also
December 2000.
So that's also a long time ago. So it was like, what were you trying to put together? What have you been doing in this sort of intervening period? And what's the end game here? So what have you constructed?
I'll dial it back and try to remind you what happened from 2002 to 2012. There were really brilliant, nice discoveries in remote areas and high-cost exploration, and we call that frontier exploration. Well, in the Abitibi, from 2002 to 2010 or 12, there was no less than 10 deposits that were drilled, delineated, permitted, and brought into production. The common denominator, not one of them was a new discovery. They were all old projects that had been shelved due to bad economic situations or corporate decisions. And these things were sitting there like literally sitting ducks. Um, and that we call Renaissance exploration. So when Cartier's turn came around in 2012, and it was a long bear market in the making, we had $3 million in the bank. And we knew the characteristics of a lot of these projects, their mineralization types, their alteration types, their so on and so forth, their technical degree of difficulty. So we started mining financial statements instead. And there are a few financially distressed junior companies out there. We made an offer on 4 deposits and were able to pick up these deposits. By 2016, somebody had caught on to our signature acquisition program. And one of those companies was Agnico Eagle. And so by then it was obvious that what we were going to do, we're going to focus exclusively on projects that had, demonstrated historical prospectivity to them. And so our exploration is not all that exotic. It's drilling at depth known mineralized gold zones, zones that can offer wide low-grade mineral intersections or thin high-grade mineral intersections. We chose to focus on the Chimo Gold Mine simply because it has infrastructure, a shaft and drifts, and it is only a 30-minute drive from downtown Val-d'Or. So, we chose to de-risk a lot of our exploration approach. It's a lot more expensive to do, but then again, you're held to a high level of accountability because of the historic data set. So there's not a lot of arm waving you can do,
Okay, so that's interesting. So rather than go greenfield or try and make a new discovery, you're saying there's a lot of historic data out there. We've got a very good idea of what's there, and for one reason or another, it's been shut in. But let's take a look at the best of those. So you've gone through a desk research process there. Okay, but give me an idea of the criteria that you were looking for, because you must have looked at more than 4, obviously. So why pick on these 4?
Okay, interesting. Here's a bit of the secret sauce to that recipe. We had actually about a dozen deposits that we had flagged. We shortlisted that down to about 6. And there were actually only 4 available. And the criteria were these things had to have at least 3 dimensions to it. A historical resource estimate. I'll get back to that later. They had to have mineralization that was included within rather wide or broad alteration zones. Things that obviously were going to have legs to it, not like, one-offs. They had to have high-grade components and also low-grade, wide capacity. We tended to focus on things that were done pre-BRIEX. And the reason for that is these resource estimates were largely ignored because they weren't 43-101, for one. For 2, anything that had been associated to BRIEX was obviously, people shied away from those because they were associated to scandal. For 3, they were generally held by companies that poked at these things a lot, but in a widespread manner, never following up on the original discovery, but doing wildcat holes left, right, and so generally people would say, oh, that's an old project, it's being looked at, done that, but the true potential of the project always remained that the main discovery was never really looked at depth because it was pre-1997. So you throw into that mix all of those criteria, the grade, the alteration, the fact that it was associated to scandal, the fact that it was perceived as being looked at and there's nothing left to do with these projects. And they were also held by juniors that were running out of cash. So we bought these things. If you look at the historical resource estimate, not 43-101 of these projects, and you add up all the ounces on those 4 projects and the cash that we paid for them, you're looking at less than $1 an ounce to acquire those projects. That's our starting point. We then obviously got lucky because the markets turned in 2016, and we struck a deal with Agnico Eagle whereby they became a strategic investor in Cartier. And that legitimized our exploration strategy and basically sponsored our what we did in 2017, which was raise, I think, $17 million. And we never looked back. So today we sit with a lot of cash.
You do indeed. But so tell me this. So that's what you wanted. What did Agnico Eagle buy into? Because you've gone through a process of identifying the types of assets. Makes a lot of sense for the reasons you've given. But they will be looking for something else. They're looking for, future scale, future optionality on that scale. So what was that conversation like when you had it? Were you selling to them or were they selling to you?
We obviously were selling to them, but we were selling to them because they were buying into a business model that we had set up. Again, let's dial back to when I was with senior mining companies. About 20 years ago, senior mining companies started to dismantle their exploration offices. 25, 30 years ago. They started to dismantle their exploration offices. And at the same time, there's a whole bunch of juniors cropping up. And they said, let's the juniors find these things. And when they do, we'll just swoop in and buy them. Well, that was fine at first. But then the juniors started to lack performance. And they started to do the prospect generator and doing this remote exploration. And only a few, I'm not saying Cartier's one and unique, only a few decided to say, we're going to focus on brownfields projects. We're going to try to bring these sub-shovel ready projects to the senior the producers, because since they had stopped exploring and they were relying entirely on the junior exploration crews to do it, well, and so Agnico and the likes, the senior companies, they still do some exploration. They buy their ounces. They bet on other juniors. So they have a mix, right? And with us, they decided to invest in our business model because we focused here in the Abitibi. And they said, well, if they do their work right, one of the 4 projects is gonna pan out. Originally, our discussion, was about, listen, you invest $4.5 million, that'll give you 19.9% of our company, and we'll embark on a aggressive drilling program to drill out these 4 projects and see which one pans out. Well, that same year, our stock price started rising. We got interest from other parties saying, hey, we like your business model. We like the fact that Agnico is bankrolling you. We like the drill results that you're pulling out. And so we kept raising money throughout the drilling. And then all of a sudden, Chimo broke away. It broke away in the sense that, hey, this past producing mine was actually delivering above and beyond what we thought it would, eventually deliver. You got to remember, this is a past producing mine. They had extracted just under 400,000 ounces and from 3 shear zones. And there was, about 25 individual veins and mineralized zones that had not been followed up at depth. So essentially, since 2017, we've been drilling Chimo and shelved the Benoit, the Wilson, and the Fenton deposits for later work.
Okay, so you're keeping them as optionality. I get that. Again, 2017. So you've had 2.5, 3 years of 2 seasons of drilling.
Well, it's a very good point, and I'll add to that. one of our selection criteria was that every single deposit or project that we have must not be windowed in by winter or summer drilling. So we could drill all 4 of these deposits 12 months out of the year. In other words, as a joke, if I can't drive to a local donut shop and have a takeout coffee and be able to drive up to the project, and the coffee still has to be hot. And for us, that's that proximity has a tremendous impact on the cost of operating. You know, there's a rule of thumb in our business. You could either pay a helicopter $1,500 to access your project site, or pickup rental 1 month $1,500. So you want to be putting your money into the drilling and not into the peripheral stuff.
I love that. That's really important, because that affects the economics significantly. Because if you're not drilling, you're just spending money. If you're drilling, you could be creating value, right? Yes. So that's a really big point. So you've been drilling since 2017. What have you done? Yes. What have you created? What do you now know?
Well, we've obviously, all right, I did mention earlier on that one of the things that we like, although it's not glamour, is being held accountable to a very robust data set. So the Chimo Mine has roughly 4,000 historic drill holes, a huge 60,000 plus data set of assay results. All the infrastructure, everything's there, metallurgical reports, rock mechanic reports, production reports. So we like to be held accountable to the data, and with not a lot of wiggle room for arm waving. Might not be perfect for the retail crowd, but the corporate people like that a lot, because that's when they come in and do their evaluation to whether or not they're going to pick up the project. Their engineering teams can wrap their heads around that type of situation. So with Chimo, we made damn sure that we brought up to speed to modern digital, robustness, the data sets of the infrastructure, of the drilling and sampling, so on and so forth. We completed 116 diamond drill holes, 54,000 meters of diamond drilling within 500-meter radius of the known infrastructures at depth and laterally. All right. And what we did is we then did a maiden resource estimate on the stuff that is the most lookalike mine material. We are on the verge, within the next week or so, of producing a second resource estimate on the northern shear and southern shear. The significance of that being that both those components are shallow and have a lot of upside potential at depth. And in the central shear, well, we continue to drill that on the easternmost discovery we made mid 2019, and then we've also recently mandated engineers to come in and look at the shaft haulage capacity of the infrastructure, potential stope design configuration to enable us to take the cutoff, the 2.5 gram per ton cutoff that we have, and push that down to 1.5 gram per ton. Then the mineralized material underground would be 3 grams per ton. And then another engineering aspect that we're looking at is sorting that rock once it gets to surface to high grade that. Now, there's a lot of moving parts to this engineering and this resource estimate stuff, but wrap your head around the fact that what we want to do is avoid building a tailings impoundment site at Chimo, avoid building a mill, right? Trucking higher grade material to the 6 or 7 under capacity mills in the vicinity. So lowering CapEx, lowering OpEx, increasing IRR and cash flow for this project. And since it is a past producing mine, and you are telling the local authorities that you're not going to build a new environmental scar on site, and you're going to use pre-permitted tailings impoundment sites and mills, well, that allows for faster permitting and bringing into production a lot quicker. And most people talk about number of ounces or cost and stuff, but time is a cost item that we tend to forget.
Absolutely. It's another killer. There's a robustness to that, and I understand it. And, you know, with Agnico, people like Agnico Eagle, they do have lots of optionality. They have placed lots of bets. Because I meant to ask you earlier before we went off on a tangent. How have they influenced the way that you have designed the exploration and development of the Chimo? Because the rest of it sounds very institutional. You know, you're gearing it up for an audience who need to see this information and see the flow of process happening a certain way. So the kind of sex and sizzle that one might construct for a retail-only investor audience isn't there. And that may be damaging your short-term market cap, because you're at 25 million. I look at all the moving parts. You shouldn't be at 25 million, okay? But is it because the way that you've structured this, and is that okay?
You touched on two things. You asked me or comment to the fact, what's our relationship with Agnico, how they have impacted our exploration program and robustness. And two, you touched on the fact that our share price is not where it would normally be if we built a sex and sizzle. Okay, the first thing is we have a very healthy relationship with Agnico Eagle. They do not have a first right of refusal on any of our projects, but our team and I have worked with the Agnico people for many, many years. It's a very small community here in Val-d'Or. We have the privilege to run ideas by that technical group as often as we get the idea to do so. And they are very forthcoming with their comments and their constructive criticism. And for us, it's like freebie. It's like free consulting.
But they're not setting the tone. They're not setting the tone is what I'm getting at. You are free to make your plans the way you see fit. Got it. Okay.
Absolutely. But ultimately, we know that if we don't build it ourselves, some senior technical team will. And so you have to align your work with who is going to potentially buy it out. So that's the first aspect. Is we have a very healthy relationship with one of our strategic investors, and they don't act like an armchair quarterback, not at all. They're there, and they're only there because, and they give us this advice whenever we ask it, and we're free to follow it or not. The second aspect to your question pointed to the fact that, well, obviously we've invested very seriously on the technical aspects of our business, and not so much on the marketing aspects of our business. And I think, and my bad, we don't do all that much marketing and smoke and mirror stuff, and it is reflected in our share price. But my answer to that is, we're not selling a share price, we're selling ounces. So if we come up with an inventory of ounces where we've demonstrated through technical and engineering work that these ounces can make a lot of money for ourselves or for a producer that will buy these, then we've done our job. Our share price will readjust. It's like trying to hold a balloon underwater. Well, take your hand off and that balloon will rise to where it should be.
Right. Well, that's my point. No, I understand that analogy. My point is that there are companies out there who've got less than you who are worth 3 times what you are. I've interviewed recently a company which has got 1 million ounces, a lot of potential, and it's worth 500 million. And that is, in my opinion, a lot of smoke and mirrors. In that instance, there's no real substance to it. But people come at these things different way, and that's why we always start off asking about business plans. So what I'm hearing, and correct me if I'm wrong, is you're building something properly the way that you want to, that has some rigor and robustness to it, which at the point that you're ready to pop this balloon or release this balloon, you will do so. The value will be gained then. But that points to a certain type of investor with a certain type of potential investor that would look at you.
I get that. We get that criticism often that we don't cater to the numerous armchair quarterbacks out there, people that are not satisfied at how we should be marketing this, that we should be going out there and you know, rah. And listen, that's just the way we are. If we wanted to compete with a whole bunch of juniors out there on the IR front and spend a lot of money, well, getting back to what we pointed on earlier in our conversation, I don't think that's money well invested. I think you get more mileage out of focusing on the technical issues. And if you do deliver, the market will catch up to you. The market is intelligent. We like to say the market is silly. The market for the right assets is intelligent when the right time comes around.
It can be, and then sometimes it isn't. But I'm not. It's not a criticism. I'm just trying to help certainly people like in our audience watching this go, well, identify where is this company? What type of company is this? If this is a quick sex and sizzle type story, some people might be interested in that, others won't be. If you are setting things up with a robustness and a soundness to the way that you do things, but it will break at the point where you deliver whatever it is that you're going to deliver, then that's going to be for some people and not for others. So I don't see your plan as being right or wrong. It's just going to be right or wrong for different people. So that's why I've enjoyed listening to the way that you've set this up. I understand it.
I was once told by one of our former chairmen that he had been through the exploration phase and then they couldn't sell their project, so they had to build it. And he says, Phil, what I remember is your audience changes through time. And don't hang on to an investor. I mean, when somebody buys your shares, he's bought the right to sell it whenever he wants. He buys it for one reason only, and that is to make money. And when he buys it, is he trusts in your ability, your technical ability to do what your skill set is, and our skill set is the technical stuff. I do feel sad. I'm a very large shareholder of this company, and I keep buying shares whenever I can, right? Because when you keep drilling, as we drill, and you keep doing engineering stuff, you're more often than not in a blackout situation, right? So when I hear people saying, "Oh, president is buying his shares," or he's selling his shares, he must know something. Well, no, that's the definition of insider information. When you see a CEO or an officer buying or selling shares, it should be precisely because he knows nothing that can influence either way, right? So I think in our case, and I've seen other CEOs and CFOs and directors do this, you got to put your money where your mouth is. And listen, we've taken the ball all the way down the field, and we're seeing the light at the end of the tunnel. We sure as hell don't want to fumble the ball in the last 9 yards, right?
Okay, so let's carry on that analogy. So the light at the end of the tunnel is what? What happens at the end of the tunnel, and when?
Okay, at the end of the tunnel, we've demonstrated that this project is viable or not. It validates our exploration approach, and therefore we could repeat the process on our other deposits.
Sure.
Right? And we will choose the best way to reward our shareholders. We have not, like some other juniors or some other exploration companies, threatened to build this thing. You have to understand that when you go from a 4-man crew to having health and safety meetings with 200 people, you got to walk the talk here. It's a lot of four-man crews say they're going to build something, and then they have to build a technical team to get it off the ground, finance it, et cetera, et cetera. And although it's easier to do in a brownfields area, project like Chimo, downtown Val-d'Or, because you have access to the professionals, and theoretically the project capex is a lot lower than a remote offsite project. Well, you always want to make sure that you don't cry wolf too early. If we decide or elect to build this thing ourselves, it's because the conditions will dictate that that is the best reward for our shareholders. If we decide to sell this project to an established producer, it is because that will be the best reward for our shareholders. We can also threaten not to sell it if we feel that the right offer is not there. That a lot of people can't wrap their heads around. But why should we sell an asset at a discount where we can simply repeat the process?
Okay. I'm still not quite sure what length of tunnel you've got to travel to get to that point, but you're saying it's going to depend.
Months.
6 months. What's happening in 6 months?
Well, because in the next 6 months, we'll have completed our drilling, all the drilling needed to deliver our third resource estimate. We'll have in-house all the engineering study that we need on the stope design, on the shaft haulage capacity, on the production scheduling, on the mineral sorting, mineralization sorting with Steinhardt and Tom or whatever. And then we'll take all of these engineering studies and compare those with the resource estimates and find the sweetest spot. So we'll have, within 6 months, we'll know if this thing is going to be really, really economic, or just economic. And because at one point you can't, you have to stop drilling and move on to the next project.
Right.
Any other work will simply benefit the future purchaser and not your shareholder.
Right. So in 6 months' time, you're sitting down with people going, right, I'm ready to sell. Is that what you're saying?
To establish what's the next step. All right. Remember when we were in school and there was only so many hours that you could study and then you'd plateau. Every extra hour, right, you would get a better grade. So the amount of work we've done or conducted on Chimo has brought us to that point. That's why I say the 6 month that we now need to do is going to get us ready for that exam. That's what I'm saying.
And then you may decide to sell, or you may decide to carry on.
To carry on, build it ourselves, sell it, spin it off, come up with some creative thinking to the one thing we want to do before moving on to our next project is reward our shareholders. They have been patient for the last 3 years, and we need to reward those shareholders. It will be a validation, if anything else, to then move on to our Benoit deposit, and then we'll sell it.
Okay, so I want to be clear what that means. So reward them with some kind of dividend if you sell?
Indeed.
If you sell only though, right. Okay.
Well, let's just use numbers here. Just bounce numbers off the wall. Let's say we're able to establish that there are 1 million ounces on Chimo. Let's say the going price for ounces in a established mining camp is $100 an ounce. 1 million ounces times $100, that's $100 million. Why is our market cap 25 million when we have $100 million asset, right? With gold trading at Canadian $2,400 an ounce. Well, we got to be pretty shitty salesmen not to be able to pull that off. And I believe that we're going to be closer to the 2 million ounce mark. And I believe that ounces in the Val-d'Or mining camp are worth more than the weighted average $100 per ounce. So our challenge in the next 6 months is demonstrated is going to be to demonstrate that economic worth for the asset, and then pulling the right strings to monetize that and reward our shareholders. And if you use an 80-20 model where let's say you capture a huge amount of cash, you dividend 80% of that to your shareholders, and you keep 20% to march on towards with the new adventure. I think people will like that, and I think that should encourage people to invest in Cartier.
Pareto would love that number. Right. And then you've got 3 other assets. Do you, from the work that you've done so far, understand which one of the 3 you'd go and tackle first?
Definitely. Benoit is the project that we anticipate working next. And in fact, we've already launched an assessment of the resources that are in place. Historically, there was 72 holes, 24,000 meters of drilling in a little, subsurface pod from 0 to 300 meters. We drilled at depth to 700 meters and confirmed that the system's still alive. The first thing we're going to do is to wrap a resource estimate around that original deposit, and then engineer an exploration approach very similar to Chimo.
So same again.
And work it from there.
Cookie cutter. And do you think you're going to be able to get, because again, you've got a bit of information on Wilson and Fenton, do you think you're going to be able to cookie cutter that too, or are they more complex?
They are, in fact, if we're able to renegotiate with SOQUEM our position with Fenton, we're going to try to work Fenton and Benoit together, simply because of economies of scale. Both projects are within driving distance of each other, and there's a mill and tailings facility right smack in between both projects. It is currently owned by, I think, Bonterra or Kirkland Lake. And both projects happen to be in that new windfall area.
Okay. Have you got enough money to do all of this?
We have $6 million in the bank right now,
Mm-hmm.
$5 million hard cash, and just under $1 million flow-through money. Our burn rate, when not drilling and not blowing it out, doing any IR, is about $50,000 per month. So if you were hit by a severe bear market or severe crisis, we have enough cash to keep doing what we did in 2012, doing some aggressive shopping and keep building the pipeline. We're very comfortable and confident that with the cash in hand, we could definitely get our 6-month end of the tunnel stuff done, and then, march on towards a brilliant future.
How many shares do you have?
191 million, no warrants, 13 million options, some in the money, some not. No, we're looking good. We have a very good cash position, very tight, lean, mean burn rate. I think if this COVID situation turns around, and it's going to have to at one point, I guess, then we're well positioned to be ahead of the race.
Philippe, thank you very much, sir. I enjoyed listening to that. New story for us.
I thank you.
Yeah.
Be safe out there.
We will be safe, and you stay in touch. Let us know how you're getting on with the drill program. Like I say, I think it's going to appeal to a lot of certain type of investor. Happy to, wait for your plan to play out.
Well, in the next week or so, the Quebec government should be announcing release of the confinement here. They've already deconfined the mines, so the mines, the producers can get back to work. Within a week, I think they will allow exploration drilling to continue and the labs, commercial labs, to open. and then it's business as usual. Unfortunately, as in most jurisdictions, the smaller businesses, the barber shops, the restaurants, that's, I don't know, but I mean, life will go on for the heavy industries such as forestry and mining. And here, just to give you an idea, in Val-d'Or, it is forestry and mining, and so and they're very high level health and safety. So earlier on, when the government said, "Hey, you guys lock down," well, the workers here said, "Oh, no problem." They're used to high level health and safety, and the subcontractors to these big industries like mining and forestry, well, they've adjusted to the highest denominator, not the lowest. So the whole region here, the Abitibi as such, is being isolated from Montreal and the big centers. Well, it's better for us up here. There's still snow on the ground, but
can't have everything. Philippe, thank you so much for your time again. We'll speak to you again real soon.